Folks, welcome back to the Taylor Tax Show, the show that helps highly paid, highly taxed, high profile, high net worth, and ultra high net worth taxpayers to save a bunch on taxes legally, strategically, and perennially. I'm Terrence Taylor, the co founder of Taylor Tax. I have my MBA from Harvard Business School, and I'm an enrolled agent. This is my partner, Big Al Darnell Jr. So, what's up, Big Al?
What's going on, everybody? I'm Big Al, and I love my mama.
All right, Big Al. So, today we want to talk about life insurance and specifically looking at life insurance to insure your life. And it's an interesting concept because this is the 12th in a 14-part series that we've done on life insurance and taxes. Yes, that's yesterday. The last session, we had such a fantastic conversation about using life insurance in real estate. And I know we've also had conversations about using life insurance for your business. And all of those have been exciting conversations. And I got to be honest with you, when I looked at what we wanted to talk about today, I had a aha moment that there's a way for us to talk about this subject that will allow us to help people with three things. First thing, how do you build, grow, and protect your wealth tax efficiently using life insurance? Second thing, we need to share some of the little known gems of life insurance when it comes to things like estate tax planning and estate planning. And then last but not least, we need to take a look at busting a myth that I think should be busted, Big Al. And credit to you because you brought it up in our preparation for this. So without further ado, let's jump in, Big Al.
Yes, sir. Yes,
Tell me,
sir.
my brother, when it comes to life insurance, how do you use it to grow your wealth? How do you use it to protect your wealth and pass down your wealth? Like build, grow, and pass down. Can you help us with that?
My brother, my brother, my brother, my brother.
Yes, sir.
I'm happy. I'm happy to tell you, and I'm glad you asked. So I'll tell you this is that I'll start with a story, an allegory of how this whole thing works. Because number one, with us here at Taylor Tax, what we're trying to do is we're trying to make sure that you understand this massive landscape of growing building, growing, and protecting your wealth outside of the purview of it being taxed or being taxed at a lot of the regular, ordinary rates. So, so the thing is, when we were preparing for this and we were talking about it, we were talking. I was mentioning to Terrence how there's only a few things that have a low barrier of entry, but that can hopefully create or allow you and definitely your lineage to jump the line in I guess in economic means and in wealth creation, wealth that passes down from generation to generation. Now, a lot of times, as you've heard the statistics, a lot of times one of the key markers of wealth is home ownership, buying your own home. But we all know, unless you've got a FHA loan putting 3.5% or 5% down, it's harder to get those. And that's, of course, if you qualify, you even qualify for a FHA loan. And then they're starting these unicorn businesses that are startups and grow and amass to making being worth $1 billion, or even companies that make it to the 10 million mark. I believe 70% of companies never make it to the $1 million mark. All right. And those are the ones that actually made it, first of all, because there's so many companies, 50% die within the first year, and another 70 to 80% of those that did surpass that first year uh, die within the next 3 years. So so now, between buying a house, starting a business, and having some huge retirement account that you can pass down to your children, one of the lowest barriers of entry is having a life insurance policy that could change your entire life completely, because you can get, especially if you're young enough, you get a quarter million, half a million, or $1 million policy for less than a gas a tank every single month. All right, so it takes me about $83, $85 to fill up my pickup truck. But you could get a policy for much less than $85, $1 million policy in some cases, if you're young enough and in a healthy position. Now imagine paying what it would take to fill up your tank, your gas tank, once a month, like, for however many years it needs to be. I guess maybe even for the rest of your life. But by doing that one thing, now you're able to make sure that your children have $1 million after your passing instead of passing down $1 in a dream. All right. What was the quote? Papa was a Rolling Stone.
Wherever he
All
laid
he
his hat was his home.
Yeah, yeah. And when he died, all he left us was alone. That's what it was. Like, so all he left them was alone. I'm not sure if that was a LOAN or ALONE. But anyways, so what I'm trying to say is that by just literally a tank of gas a month, your children can have access to $500,000 to $1 million. And now, of course, with your financial literacy that you pass down to them, I'm telling you, you could create something big and something special. So anyway, so that was just the allegory that I wanted to state before talking about how you can use life insurance to build, grow, protect, and pass down wealth outside of the frame in the realm of taxes. And it now, mind you, as I mentioned to you before, now you're going to be putting after-tax dollars into the policy, into the premium payments, monthly payments. However, if you're using, depending on the type of life insurance that you're using, if it has a cash value policy, then that money can grow inside of that cash value policy tax free. And then it can be accessed tax free. And then, of course, inherited funds are not taxed. So, so that's pretty much the basis of how you can build, grow, protect, and pass down wealth using life insurance. But there's a lot more nuance to that, which we hopefully opened the door or touched at least touched the surface in explaining in our last 11 podcasts in this series of insurance. But yeah, so there's a host of scenarios that we could use to show how this thing is built and grown. And remember this, you don't only have to have one policy, you can have more than one policy. You don't only have to have a policy on people that are making a ton of money, like the parents. You can have policies on yourself, you and your spouse, and your kids, and relatives, and things of that nature. The thing is making sure that you set it up strategically. So building it is making sure that you understand what the goal of the policy is where it comes to wealth building, and then that's going to inform you and making sure that you speak to someone like Terrence, which is a licensed insurance agent, along with being a licensed enrolled agent. Making sure that you speak with them about how to set these things up and setting up trusts that the life insurance can fund in order to make sure that the money goes to the children at the right age and that it goes to pay for certain assets that you want passed down, et cetera, et cetera. And then, so that's from the building side of things. With growing it, then there's processes that you can use that we've talked about with whole life insurance, where you can have your entire paycheck go into paying your premium and then borrowing from that premium to pay for aspects of your life so that your policy could grow a lot quicker over time and you can pay off debts a lot quicker and so on and so forth. That's on the growing side. The protection side is because it's in life insurance. Since it's in this entity of insurance, if you're ever sued, if you go into foreclosure, if you even go into bankruptcy, they can't take your insurance policy from you. You follow? You can have a $10 million cash value life insurance policy, and they cannot force you, from my understanding, to open that policy, extract and take a loan of whatever the funds are to pay off your bankruptcy. All right. So that's from the protection standpoint. And then passing it down, of course, when you pass, then that money passes down to your heirs tax free. But but yeah, so that's pretty much that aspect. Terrence, how about you? Is there Is there anything that any comments you have about that, or anything new since you're in the game that you think commoners might not know about life insurance and using it for wealth?
Yeah, yeah, Big Al. So a couple of things, right? First, I want to commend you on the excellent use of the lyrics of Papa Was a Rolling Stone.
Thank you, sir. Thank you.
And I do appreciate that you know the song because you went then to the next line and all he left us was alone. And I love
Okay.
the wordplay of did he leave us Aloan or Alone?
Yeah.
Love that. So I want to commend you on that.
Thank you, sir.
And thank you so much for the very thorough discussion on life insurance and how to use it to build, grow, protect, and pass down wealth. So you asked me, are there any things that are new that we may not be familiar with? So let me ask you this question, Big Al, because I asked you before, but for the benefit of our audience, have you ever heard of a second to die policy?
Not before today. That was a first for me.
Okay.
Yeah.
So this is something I want to bring to our audience because we have highly paid, highly taxed, high profile, high net worth, and ultra high net worth taxpayers who listen to this podcast. And the assumption people make all the time is that, well, these folks are wealthy, so they already know these things. But for those who may not know, and for those of us who aspire to be in the know about these types of things, a second to die policy is one of those powerful tools that you can use for estate tax planning. And if you have an estate that is valuable and you want to make sure you leave a lot of that estate to your heirs, we've spoken about this before on a podcast specifically devoted to this. You need to know the ways that you can use life insurance to protect and pass down that wealth. The second to die policy works like this. You take it out as a couple, married couple, and you pay one premium and it covers both lives. So when the first person dies, the policy doesn't pay out. When the second person dies, then the policy pays out. Why is this beneficial? Well, first of all, it's cheaper than if you got two separate policies. Second of all, you can plan it in such a way that for the estate tax purposes, especially when you're managing your estate as a married couple, you can plan it in such a way that the second person to die, the policy would cover enough of what the estimated estate taxes are going to be. And that way, Big Al, the estate taxes are paid. So it's a fascinating,
Mm.
useful policy, right? Okay. So Big Al, the the second thing that I would like to add is I think there's a little bit of myth busting we need to do about life insurance.
Okay.
You started this, so this is all your fault and also all your benefit.
All
So I'm pointing the finger in a good way, folks. So Big Al was kind enough to, in our prep for this, talk about the fact that, hey, many people believe that only the wealthy should use life insurance. And you said to me, but life insurance is actually a gateway to
right.
becoming wealthy,
Correct. Correct.
right? So generations to come, when your family benefits from the payout of a life insurance policy, that can be a gateway and a ticket to wealth. And Big Al, I've used this example and I feel comfortable using it. My belated dad, may soul rest in peace, and in my office I have his photo. So I keep his photo close. That's what my dad looked like, right? He's always looking down at me with that looking down on me with that beautiful smile and like, eye level I can see him. When he passed, as a family, we got together to raise funds to ship his body to Sierra Leone so we can bury him in the gravesite that my grandfather was buried. That was one of his wishes. And I recall we came together as a family to put together the funds to be able to do this. And I do recall that there's some family members that struggle to be able to determine how much they could really contribute given what is going on in their lives financially. And then as I got more into this space of helping people to save on their taxes and understanding how powerful a lever insurance is for tax savings and how powerful a lever insurance is for wealth building and passing on wealth tax efficiently, then I realized that, wait, some families, when they die, when someone dies in the family, the insurance policy pays out millions. So Big Al, I'm going to make this a hopefully instructive but also a funny example. Imagine a family that struggles with coming up with 7,000 when someone passes away for the funeral expenses and final expenses, and then contrast that to a family that inherits 7 million when someone passes away. Um, who do you think is going to be crying more at the funeral? The first family that are looking for 7K, or the family that has 7 million coming to them?
First family.
Yeah.
Hopefully, everybody's crying for the right reasons. But yeah, you're
Exactly.
right. It's
Exactly. So, folks, this is the insight that Big Al brought that allowed us to bust this myth about, hey, you should only think about life insurance if you're wealthy. You should actually think about life insurance if you are looking to build wealth, because protecting your life and protecting so in an affordable way, the policy can be a huge help financially to the family members who are left. And if they take good so if they exercise good stewardship, Big Al, they take good care of that money, invest it well, make sure that it's tax protected, they can pass that on to generations to come. So, folks, that's what we wanted to share with you when it comes to life insurance and how to use it to insure life, because it's beyond just what we think about the policy. There's so much you can do with it.
definitely. And there's not that many other things that can allow you to build wealth in a tax-free way
Yeah.
without you putting a lot more in there.
Yeah.
I don't care if it's a qualified plan like a IRA, HSA, simple 401k, so on and so forth, or if it's even in business. You can start business with a very small amount of money, but please believe as you start to grow that thing, you're going to need to put more and more in. But with life insurance, you'll know exactly what the amount is from here to kingdom come, so to say. And as long as you can stay consistent with that, um, it can change your and your children's lives forever with the right insights and knowledge and best practices that you implement.
Yeah. And, folks, to Big Al's credit, I want to just echo that life insurance is one of the few, if not the only policies or instruments, financial instruments, that behave the way it does and allows you to do the things you can do. So to be able to, in a tax advantage way, put in a relatively small sum of money and to have the compound growth that is tax free as the sums inside the policy is growing, and then to be allowed to take out the death benefit tax free after all that compound growth. There are very few, if any, financial instruments that we're aware of that allows you to do this in a tax efficient way. So, folks, thank you so much for spending time with us. And for those who want to learn more about what life insurance can do for you, check out the Tailored Insurance Guide. You can find it in the GPT store. And for those who want to get in touch, have some questions, some comments you want to share with us, you can reach Big Al on BIGAL at tailoredtax.ai, TAYLOREDTAX.ai, or Terrence at tailoredtax.ai, TERRENCE. All right, folks. See you soon.
Yes.